All right, happy Friday, everyone. It's time to talk markets with Jim Cramer on the floor of the New York Stock Exchange. And Jim, there's so much to get to. What did you make of yesterday's sell-off?
Well, I think that the sell-off is really part and parcel with President Trump basically saying 50 billion, 60 billion, it's going to be slapped on China, and then a realization that the Chinese have a game plan. They immediately had their 3 billion. It's really interesting. The kind of ill-informed thinking I see on Twitter. And people are saying, well, listen, the president does 60 billion, they only do 3 billion. They were ready with exactly the tariffs that they needed, exactly which fruits they were going to stop, exactly which states. It's so clear that they have an escalation plan, that President Xi is president for life. And we can't wing it. The president can't wing it. This is a homework issue, and the president seems to be limited when it comes to homework. He's walked back the steel tariffs to the point that the steel companies' stocks are below where they were before these tariffs were announced. And so I just think that people have to recognize, obviously the stock market recognized that if you're going to fight back against the Chinese, you're going to have to do it in a very sophisticated way, because what could happen is 3 billion of fruits. But how about if they decide that the iPhone 10 needs to be a little more expensive versus their own, so they put a tariff on the 10? How about if they hold FedEx planes on the tarmac? FedEx is concerned about that. They just built a new hub. So the idea that it has to be dollar tariffs as opposed to what they could do to a lot of our companies, like a Nike. Nike's Greater China was up 19%. So what happens if they decide, you know what, the Jordans are something that we want to discourage people from buying. So let's put a $5 tariff on those. Now the only good news is that Wynn is up, and Wynn is a Macau company, and Steve Wynn is gone, he sold his stock. And that says that a Macau company could get approval to buy Wynn, which it makes me feel like that maybe the Chinese are still willing to negotiate. But China's different. When you go to war against China, you have to be far more sophisticated than we are appearing to be. I don't think the Chinese government plays fair. I have been adamant that it is time that we stood up to the Chinese government, but we must stand up to the Chinese government with a clear plan that does not include the kind of targeted retaliation that they're obviously ready to do. And I think the president needs to bring Tim Cook, he needs to bring Mark Parker, and he needs to bring Fred Smith to the White House right now and say, okay, look, we understand your concerns, but you have to understand that we need China to play more fair. What do we need to do? Okay? He should bring Hock Tan in after that embarrassment of what they did to Hock Tan in his attempt to buy Qualcomm. Maybe even bring Mollenkopf in from Qualcomm. But the president's got to do a lot of homework if they're going to beat the PRC at this game. And I know the president said that trade wars are easily won. They're easily won if you have a game plan. And I felt like that the Chinese have more of a game plan than we do right now. And that's not very good for American stocks, which is why we fell so much.
Yeah, I mean, they released a list of 128 products ripe for retaliation.
Right, which is they knew what to retaliate against. And that's one of the reasons why the market was down. Darden was not that good, although I have to tell you, when I went over with the Action Alerts Club group today, I wanted to focus on Darden just because Darden went down a great deal. But see, what that did was it made it so the consumer stocks weren't that hot. But we have some today that are better. KB Homes, by the way, housing was better. Obviously, Nike better. So, and Micron was a fulcrum name. Drop will be the most important thing that happens today. But everyone needs to understand that you have to keep one eye on your Twitter feed for what the president's going to be saying about trade, and then one eye on stocks. And I have been saying over and over again, ever since the January peak, the president has been on the side of labor, not capital, which is why the market's become so difficult. Not dangerous, not scary, but difficult.
You mentioned Micron. Were you surprised at the declines this morning?
What?
In Micron, the stock?
Well, I think that Micron reported a good quarter, but there was a downgrade. The downgrade was an important one because it talked about flash. There are two lines of business that Micron has. There's DRAM and there's flash. DRAM was very strong, but flash, according to the downgrade, was down 10% quarter over quarter. Now, when I look at the numbers, I really get it that it was down about 1% quarter over quarter. Flash is very hard to pin down, but what I think is important is that you need both flash and DRAMs to go up from the mid in pricing, given how far the stock had run. This last 10 points was based on the idea that flash had gotten stronger. Now, when I was talking with Dion Weisler last week at HP, which is the PC portion, he was saying that he didn't think that flash was going to have that big a run, and that flash had kind of leveled off. And at the same time, Micron was going higher, which told me that perhaps that last bit of Micron was not going to be right. But if they can earn $11 and they can prove that things are still tight when it comes to semiconductor capital equipment, then I think what you have is a situation where the stock could be bought on weakness. But it is a momentum stock. Watch Lam Research, LRCX, to get a good handle on what's really going on. Because if LRCX's stock goes down, that means there's too many chips in the system, and you're going to have to sell Micron.
You mentioned Dropbox earlier. Is this the kind of IPO we need right now to sort of rescue the tech sector?
I do believe that Dropbox is the most important thing that's happening today, and at 10 times sales, next year's sales, that would be equal to about Adobe's valuation, and that's so that puts the stock at say 35. I have my cheat sheet here. Just a second. And my cheat sheet shows that if you look at on 2019 sales, okay, I'll just go through the prices here. At 2019 sales, if it opens at 40, you're paying 11.9 times 2019 sales. There's no Cloud King, I talk about the Cloud Kings as everybody knows, that is that highly valued. At 35, you have 10.4. Adobe is 10.4, so, and that's the number one. At 30, you've got 8.9. That is roughly the price of sales. This is forward sales of the Cloud Kings. So if you pay, I fully expect that it goes to 30. Anything north of 40, and you have to understand, it's become the most expensive of the cloud stocks that I follow. So that's the upper limits of what I would fear people will pay.
Okay, we'll be watching that Dropbox IPO. And Jim, yesterday you were at the FT Future of News conference talking.
What did you think of it?
I loved it.
Tell me why.
You talked about the insight behind your scoop on Larry Kudlow and how you got multiple sources and you were very careful because if you got it wrong, people would lose money.
Yeah, and like this morning there was a story about Target merging with Kroger, and it was very flat out. It said Target's going to merge with Kroger, and it was in fast money, and it was the kind of thing that I felt was irresponsible because it's wrong. I know from very good sources that it's wrong, and people lost money. And what I was saying is that journalists have a responsibility to get the story right, or people lose money. And this Kroger, had it happened yesterday, it would have been topic A at my conversation with Ken Fisher. Ken is so great, and we've done a lot of stuff together. The reason why I've been writing for as long as I have is that Ken wrote for Forbes, and because Ken's so great, I wanted to write. I wanted to say, oh, geez, I can be like Ken. And Ken is the dean, so the interview of Ken interviewing me at the FT conference was one of the highlights of my career.
Wow, and we have that video on our YouTube page,
good.
So I encourage everyone to check it out.
So that's great.
Yeah, so people can watch that. Jim, finally, Monday you have your monthly Action Alerts Plus call.
Yeah, and I'm going to talk about the notion of selling stocks that you like in order to raise capital. I think that's important. And the importance of buying stocks into gigantic declines and the discipline required to do that, but you've got to be right, and I feel that one of them we weren't right on. I like to talk about what we did wrong, I'm also going to talk about Facebook and how we trimmed it, and how we are concerned about Facebook. I'm going to deal with the knotty problems of being a portfolio manager at a time when price earnings ratios aren't necessarily giving you results, given the fact that there's controversies and there's a president that is no longer on the side of the bulls. There were some Twitter comments about me that, well, Jim, all you care about is stocks, and I would beg to differ. I care about my wife and my kids.
All right, well said. So that call is Monday at 11:30 a.m. on actionalertsplus.com, and if you haven't joined the club, go do it now.
You should join the club. I mean, I think it's the great value that's out there. We have thousands of people who will listen in on that call, and you get the call as part of being a member. And I see a lot of people on Twitter say, hey, Jim, what do you think of Facebook? And I'm not going to give you that. That goes to club members, and it's like pennies per day, basically. But you'll get stuff that I can't give Twitter because I protect our club members, and I don't give away the information that I tell the club for free. So I think you should join it. You should join it just for Monday's call, frankly. I think it's going to be a very good one.
Okay, Jim Cramer, we'll leave it there. Thank you so much.